Hello and welcome back to the Share Show with Jeff Fitzpatrick. It's the 17th of May 2021. And in this edition, Insight, we take a bit of a deep down into an aspect of trading. Inside Track, where we look at what's happening in the markets. In the Money, where we see what's happening for your money in the clubs. In the end, this week, I'm covering expiration and then in the news. So let's get going. And first, expiration. Let's see what can happen to our trades at expiration. Earlier this week, I sent out some information for each of the clubs on where they have trades that are due to expire on Friday of this week. And on the right-hand column, there were basically two things listed, either action or no action required. And in this section of the video, I'm going to look at what I actually meant and what the alternatives are for those headings. First of all, no action required. This is one of the puts that Tees traders have expiring on Friday of this week. The stock is ALKS. They've sold a put and the strike price is $22. For that, they got a premium of $3.90 per share. They actually had 3 contracts, so 300 shares. And the lid triggered, so there's a protective lid placed at a $21 strike price. That costs 40 cents. The current price of this stock, or at least the price on Friday when the market closed, was $22.26. So if we take that into account, we've got an exposure of $17.70. And I've got to that by saying we'd have to pay $22 for them, but we've already had $3.90, so you've got to take that off, and then we've got to add back on what we paid out for the lid, 40 cents. So that comes to $3.50, which I'm taking from $22, and that gives us the exposure of $17.70. So this is where the lid has actually triggered. So we've got the lid and the stock is above the strike price of the put that we sold. Hopefully it stays like that, and all that will happen is that we will keep the $3.90 less the 40 cents that we got for selling the put. There are 300 of them, so 300 times $3.40 gives us $1,050. So there's no action to take. We just sit back and let this money happen. If, on the other hand, the share price falls and it goes down below 22, then we're protected. The worst case scenario is that the shares would be sold again at $21 as far as we're concerned, and we would be getting $2.50 instead of $3.50. Happy days. In the next example, EURN, it's a different matter. So the strike price of the put that was sold by Tees traders here is $10, but the current price is $9.55. Therefore, these shares are likely to be put to us, and it will be 700 of them at $10 each. And on this occasion, the price of buying the lid didn't come down to the 10% limit order that we put in, so we do not have a protective lid order in place. So let's have a look. We will pay $10 for the shares. However, we got $2 in premium, and therefore ignoring the brokerage fees, our exposure is $8. The share price at the moment is $9.55. So we could simply accept the shares at $10, sell them at $9.55, and we'd be $1.55 to the good. Or we may decide to sell a call, a covered call against the shares that we will own, or we might just sell the shares and then sell another put. So even though the share price is below the strike price, we're pretty happy to be in the situation that we are with this stock. We're certainly not too worried about it. For us to be in a loss situation, the price of the share would have to fall from its $9.55 level at present to below $8 this week. And that's unlikely. And even if it did, we would be able to sell another call and get out of it. This is really a very forgiving system of trading. And that covers the situation that we're in with all of the puts that we've sold that expire this week. More of that later in the program. As far as calls go, then they will simply expire. So for example, we've got a call sold on FRO, which is Frontline. The shares originally cost $6.17. We've sold a $7 call for 40 cents, and we got $200 for that. We've got 500 of these shares. We've already in the past collected 62 cents on these. Overall, our exposure is down to $5.15. The current price of the stock is $7.79, so they are likely to be taken off us. Someone's going to get these shares for $7, and that's okay by us. We're very happy. We've had $1.02 in call income and the difference between $6.17 and the price that we get for the stock at $7. So that's a total return on this trade of $1.85, and that's 29.98%. Not a bad month's work. Next, inside track. What's happening with the overall market first? The market took a bit of a dive last week. Whether we look at the NASDAQ at the top, which follows 100 tech-based companies, it came down, but hopefully it came down to support. It's turned around and it's already moving back up, and our portfolio is doing very well. On the S&P 500, that's 500 shares. Again, there has been a bit of a fall. That's reversed now. We will get ups and downs in the stock market, as it never ever moves in a straight line. So there will always be times when we're ahead and times when we are not so far ahead. However, hopefully there are never times when we're behind altogether. And my tips of the week. First of all, EBS, Emergent Biosolutions. This is forecast to rise by an incredible 77%. It is a stock for larger accounts, or at least medium accounts, as it closed on Friday at $62. But that's going to be a very large increase in terms of dollars, as the chart shows, with a really good low and building support. And more of a share pick, New Oriental Edu and Tech Corporation. That closed on Friday at $12.20 and is forecast to rise to $20. That's 64%. Another one, looking at the chart, that is at a really good low. However, you should know that these are just two stocks of about 25 that I've got forecast increases on that we'll be looking to use in our trading over the next week. So let's have a look at what's happening around the clubs. Tees Traders first. So Tees Traders up from the end of April by $6,774. That's 11%. I think a little bit of that is new money, but nonetheless, it's going to be a good month. And we have Expiration Friday to come. Meanwhile, over at Pentland is up $2,576. That's 18%. You may recall that Pentland is actually due to merge with Fortune, but we won't be doing that until we clear our stocks and options at a profit. And then the Diamond Partnership. Wow, the Diamond Partnership's gone up $22,689 in the last 2 weeks now, 5.7%. There is some new money in there, but a lot of that isn't new money too. We'll be looking at the profitability over the next couple of weeks as we get to the end of the first full quarter of trading. And Fortune. I think there's a fortune gone in new money. There's a lot of new money gone in, but again, it has got a good gain on trading as well. Fortune is up $33,198 or 62% almost. Bearing in mind, this started as a £200 a month club in March, and its net liquid value is now nearly $87,000. It's gone virtually straight in to higher level trades and higher level profits. So back to expiration week to finish off, and now we'll look around each of the clubs and see what's likely to be going on with them. And now I've sent out information for you to see on your own clubs, but I get the feeling that people like to know what's going on everywhere. So Friday of this week is Expiration Friday, and frequently the brokers do pull prices down as we get into Expiration Friday. The thing for them is it's less work and they've got fewer buyers and sellers to find. So they're happy to manipulate the market and pull some of the prices down a bit. So we don't know really yet what the outcome is going to be. But based on Friday's closing prices, this is where we're at. And first, Tees. So Tees should pull $5,000, almost $700 as its put and call options expire on Friday. And remember what we said earlier in this show, even if some of those prices do fall, then we're not too worried. We've got really good risk mitigation measures and risk avoidance measures in place, ready to go. And I can assure you that, as usual, all of this is being watched like a hawk by me. And Pentland. Pentland have only got call options going, and they've only got a few trades anyway. It's quite a small account. Here they are. First, BlackBerry. And you'll notice that BlackBerry's had a call sold against it, but it's not for this Friday. It's for the 28th of May. There are weekly options. There are also annual options, as well as the normal monthly ones that we trade. And the call that has been sold is a $9.50 call. The shares were bought for $9.42. So if they were taken away at $9.50, we'd be very happy. But as the current price is about $8.45, then it's not likely that we're going to get $9.50 at the end of the following week to this for these shares. But that's fine. We'll just sell another call and collect some more rent, and let the share price rise. Then they've got CDE, and we've sold a $10 call on those, having paid $9.45 for the stock, and the current price is $9.30 at 45 cents for the call. So it's unlikely that they'll be taken from us, and we will be in profit, and we'll either sell the shares or sell into the call. Teva is their third one. Shares bought at $10.17. Last price on Friday was $10.57, and it is a $10.50 call that has been sold. So again, I think all of the outcomes around that one are likely to be good for Pentland. And the Diamond Partnership, there's a lot to look at here. They've got quite a number of puts and a couple of calls expiring on Friday of this week. But in summary, you're looking at almost $13,000 of call income. There are, in fact, 13 trades there, and only one has got a negative sign against it, and that we know exactly what to do with. We will make money on that put, no question about it. And Fortune. So because Fortune is only a recent starter, at the moment it has sold puts, but none of them are due to expire. So all it's doing is happily collecting rent on its call options. And again, we are not concerned about any of them. It's just a money-making exercise. And that's it around the clubs. So next, news. And there's not too much news this week. The main thing I want to bring to your attention is the change in the meeting dates. Because there's so little action to take on the trades that we have at present, I think the best thing to do is to have our meetings next week after expiration Friday, when we then face the choices on whether or not to sell the stocks that have come to us or to sell calls against them or whatever. So here we go. Diamond, Monday, 6:30. Fortune, Monday, 7:30. Pentland, I'm going to get into trouble for. It's Tuesday at 6:30, which happens to be my wife's birthday. We won't tell her. And Tees on Wednesday at 6:30. And I've just got one more thing to bring to your attention, and I can let you go. I've been writing quite a number of articles recently. It's actually part of a management development program that I'm working on. But I think that they're okay. They're quite interesting. So I'm going to put them together as a blog. So there'll be a blog on the Smart Investments AI website where you'll see some of my articles. They can be quite controversial. They can be quite critical of the finance industry, but that's almost intentional. I want it to be controversial because I'm trying to gather interest and get people to read them. It's a little bit of the case that no publicity is bad publicity where these articles are concerned. That's it. Great. Let's see what happens on expiration Friday. We'll be seeing you all at the meetings next week and, of course, in the Share Show. Thank you for listening.